Okay, welcome back. So we are just about counting down to the pre-open session. 3 minutes to that. The SGX is indicating an absolutely flat kind of start. 8 points or so is what we have. Manoj Muralidharan is Vice President Derivatives at Religate Broking, who's joining us. Manoj, great to have you with us here. Thank you very much. What's your sense? More downward bias, Manoj, according to you, today and over the next couple of days? Or you think there can be two-way price action, sharp bounces if there are to be dips?
Good morning, Prashant. Prashant, I think this is a pattern. This is going on since last 3 months. When we start the series, the Nifty has a position of around 90 odd lakhs, and then it goes to around 1.25 crores. So it happened this time also. If you remember, last week we were expecting a short covering from 17,800 to 18,100. So more or less that has happened, and the profit booking has taken the market down to a good 450-500 points. Now, the irony here is there is, along with the IVs, the VIX has gone to a 19.5. So that summons some more downside. But we believe that 17,650, 650 for this weekly expiry might be the resistance. So use a 100-point surge to sell the Nifty, and the downside support would be 17,350 to 400. A better strategy when you see a profit booking is always you sell call options of 17,900 and above strike. That is one that can be done. For clients who would want to get into an option buy trade, doing a 17,500 and a 17,300 put bear spread can be done at, let's say, 70 rupees. That can give you a target of around 140 rupees.
You want to take us through the individual stock ideas as well, considering that it's such a volatile market? What would you look at?
Sonia, I guess Reliance for the first time, at least in the last 4 or 5 days, I've seen some short positions, and the resistance comes somewhere close to 25.10 to 25.20. So try and buy a 2,500 strike put option for this September end expiry. You will get it close to 45 to 50 rupees. A stop loss of 30 rupees, and that can give you a potential 75 to 80 rupees as a target.
Okay, that's it. No more stock ideas?
Hindalco we have seen some short positions. So I guess, we would say, at least in the metal pack, it would be a sell and buy. But then stocks, as I said, will stick to Reliance. And if, yes, we like banks, so we would wait for some correction. I believe 40,200 to 250 on the bank Nifty is a good price to go long. Let's say 150 points in the stop loss, and we expect at least a 40,600 to 700 on the index.
Okay. All right. Thanks a lot for joining in. Manoj, have a great day. So that's Religate Broking with their views. Ujjivan Small Finance Bank is the first corporate that we're speaking to this morning. They've raised 475 crores via the QIP route. Itira Davis, the Managing Director and Chief Executive Officer at Ujjivan Small Finance Bank, joins us now. Mr. Davis, thanks a lot for joining in. Tell us about the fundraising. In fact, you've already raised the money, and your Tier 1 ratio has now strengthened to 22.4%. How do you see loan growth moving along?
Good morning, Sonia. It's good to be with CNBC soon after we have completed the QIP raise. Yeah, it's a good position to be in because, as you said, the Tier 1 is looking good. We have also had some Tier 2 in the last few weeks. In the last month, actually, we have raised a total of 775 crores for capital. And our capital ratios are now back to the pre-COVID levels. Tier 1 and Tier 2 together are 26%. And that's a fantastic level to be in. And that gives us all the impetus for growth and also for the reverse merger.
Is there a reason why there are only insurance companies as investors in the QIP amongst the institutional clients? Is there some correlation of the bank assurance work?
No, there are insurance as well as other investors. We have some foreign investors as well, and some other funds have also joined us. The reason we have the insurance companies is that we are partners with them in the insurance business, and they have been with us for a long time. So I think they are long-term partners. So that is a good position to be in, and we are looking for long-term investors because Ujjivan has a plan for several years ahead in terms of growing our business in the mid-market, and looking at that segment of is a big segment. And we'd like these partners to be with us. And we will be having further capital raises in the future. I think that's important.
Mr. Davis, could you tell us how's the disbursal momentum so far in Q2? We're also entering the festive season. Post this fundraise, what are your growth targets from here out, FY23 and beyond?
Good morning, Prashant. Yeah, I think, we have had a very good first quarter. The results talk for themselves. The second quarter is going in the same direction, and disbursements are doing well. And I think as you rightly said, the festive season is around the corner. There is a pickup, but the only damper which we are closely watching is the interest rates, because if the interest rates go up further, then the markets may slow down. But as of now, it's looking very good, and I think for the rest of the year we are on the right track.
So when you say on the right track, Mr. Davis, any guidance you'd like to give us on disbursement growth and credit costs?
No, the overall balance sheet growth, I would say, is heading between 25 and 30% for the year. And I think that is the level because, we have different businesses. So disbursements, the first quarter was very good compared to the previous year first quarter. So, and that trend will continue.
Okay. I just had a follow-up. You said that you're partners with the insurance companies who have participated in the QIP. What kind of growth in the business are you expecting from these partners?
I think, post-COVID, the response to insurance policies and general insurance has picked up because people are looking at health insurance more positively these days. We have the credit life, which is linked to the disbursements because as the disbursements go up, that part of the insurance also picks up. So if we are seeing a good record level of disbursements, the insurance will also follow through on that.
Okay. Mr. Davis, you said that if interest rates go up, right, is that already starting to impact at the margin? Because rates are expected to move higher, a little bit more. I mean, globally, interest rates are moving higher. That will be the case here as well, maybe a little lesser than elsewhere. How does that impact you? Your cost of funding, also, I mean, borrowing at the margin from customers. Could you tell us?
Yeah, the cost of funds is leading the rest of the market because I think the lending rates tend to follow, and that's because the market is also a bit tight with RBI taking out a lot of liquidity from the market. So interest rates across the board, not only just among the small finance banks, among the bigger banks as well, we have seen a hike in interest rates, and that has not been matched as yet by the hike in the lending rates. So, NIMS is getting a little squeezed across the industry. We have also seen a slight fall, but we are managing it very well. It's fallen by a few basis points. And the issue is to make sure that it doesn't fall. We have budgeted a 50 basis points drop during the year, and that is something that we can live with. So if it is a little more than that, it'll put a little bit of stress. But otherwise, we are managing the NIM ratios quite well.
Okay, well, the stock has had a very, very smooth run. I mean, it's been a 60% growth in the last 3 months alone. Finally, then, Mr. Davis, any inorganic opportunities that you're looking at, any acquisitions that perhaps you're looking to do within this calendar year, or are you looking to get acquired?
Well, all good questions, but we are currently focusing on the reverse merger. Once the reverse merger is completed, then we can look for inorganic opportunities. And I think there are some things that we need to look at. So, as we complete the reverse merger, that's something that we can discuss.
As an acquirer or a potential target?
Well, I think for now we'll be looking at acquiring.
Okay, post the reverse merger.
Post the reverse.
Got that. Mr. Davis, thank you very much. Good speaking with you, sir. And thank you very much for your time here on the channel. Thanks indeed. So that's Ujjivan Small Finance Bank with some perspective on how things are stacking up. I think, let's just look at the pre-open rates if we can, the Nifty and where it is now tracking. So absolutely flat, 7 or 8 point change, 17,540. The Sensex is showing a bigger 110 odd point fall. We'll have to see if the path of least resistance today is, maybe on the way down, or is there going to be a bouncy like what we've had in the first 3 sessions of last week. Thursday and Friday, of course, were different. So that's what we have. Cement is the other space, which we will talk about in some detail in a bit from now. That's going to have a lot of attention, a lot of eyeballs with what Ambuja essentially has done in terms of the fundraise, but not really been very clear in terms of what it plans to do with all the money. But that's in a bit from now.
Yeah. And a couple of other stocks that I'm tracking, McLeod Russell, I think there was a massive block deal on Friday, and there was a Kolkata group based company which bought that. Now this is a company which I've tracked for long. It's again the same BM Khaitan group where you had that massive movement Everready. Now it's different, of course, but here again the promoter holding is down to almost zilch. It's 6% promoter holding. The rest, everyone, it's scattered. But it's a stock which has destroyed wealth over the last 10 years or so, like Everready did, by the way. And now, there are bets once again being taken. But, last time there were bets taken on McLeod that fell flat. So whether this time it's different or not, but there was 20% circuit move on Friday. And it looks like, at least for start, there will be 20% move that you will see in McLeod Russell to start with. So that, of course, has been for the stock to track. We'll try to get more information on who exactly that buyer was of that big block which happened on Friday. But the pre-open has now actually settled. The Nifty is up about 9 points and the Bank Nifty is down 91 points. And what's interesting is that actually it's the IT stocks which are sort of batting for the bulls this morning after the last 2 days decline. Infosys, TCS, Wipro are your top gainers, while on the losing side you have a couple of these financials. ITC is also starting a bit lower, Bharati is starting a bit lower. Let's take the 9-10 calls actually then before we move forward. Sudarshan, if we open here, you were clear on the move that wait for the Nifty to stabilize around 17,500. If it does, then buy the Bank Nifty. Is that right? And what's your 9-10
exactly.
call? Yeah.
Absolutely right. And you're right on that. That would be my view. And the 9-10 call is Muthoot Finance is an intraday short with a stop above 1658.
Some of these gold finances, I mean, it's really, things have turned. Muthoot used to be considered at one time in the same pedigree as Bajaj Finance. Just look at how the stock has brutally corrected. Mitesh, your 9-10 call?
Anuj, I will go with a sell on Aurobindo Pharma with a stop at 541 and a target of 515.
Okay, well, a couple of more stocks do deserve mention, actually, apart from McLeod Russell, that's up 20% right now. Zomato is coming back, up about 1.5% over there, and banks are definitely in focus yet again. In the broader market, South Indian Bank, Union Bank are all moving up with some strength. In fact, Abhishek is here with us to give us a note that has come through on banks, a couple of brokerages actually. Abhishek, over to you.
Well, the CLSA conference is going on or is been over and banks were present over there. So they have written on SBI wherein they have raised the target price to 680 per share from earlier target price of 660 per share. Management over there has indicated that loan growth at the system level is coming back and they are seeing capex based demand also coming back to them. So SBI is finally, expecting net interest margin to also expand from current levels by about 20-25 basis point and on a gross basis and about 15 basis point on a net basis. They have not taken exposure, to any large Indian corporate in the overseas market and they have no urgency in terms of capital raising. So for Axis Bank, CLSA has increased the target price to 1,050 from the earlier target price of 975 per share. They say that there is strong risk reward given the fact that valuations are undemanding and management has guided for a strong sector outlook in terms of growth and margins also improving for them. So Axis expects, Citibank merger to be completed by Q4 FY23 and it expects robust overall growth but is choosing net interest margin or better profitability over growth. So they, especially in the corporate segment. So bank expects an ROE of around 16% net interest margin to expand by 20 basis point to about 3.8% level and they expect cost to asset ratio of around 2%. Back to you.
All right, thanks a lot, Abhishek, for that. The other large cap that we are watching this morning is M&M. Now, M&M, the Mahindra Group has sold 30% stake in their renewable energy arm for 2,317 crores. The renewable energy arm is called Mahindra Sustain, and they have sold that stake. They will then set up an InvIT to list the renewable energy assets. So this is a part of their plan that they laid out way back in 2020, where they will be looking to list various of their subsidiaries in order to unlock value for shareholders. They're looking to build a very strong renewable energy business. Currently, they have an operational capacity of 1.54 gigawatts. So of course, this is positive. The other positive news flow is that CLSA has maintained a buy. They have a target price which is well above the current market price, 1567. And the title of their note is M&M is going through a golden period. They say that there's the full positive impact of the fall in raw material costs will come through from Q3 of FY23, and they have very strong bookings currently across SUVs. The bookings overall stand at 240,000 units. There are multiple new SUVs planned over the next 12 months, including the new XUV 300, the Bolero refresh, the 5-door Thar, and then they have, of course, a slew of electric vehicles as well. So that's the optimistic view on M&M.
Which one are you buying? 5-door Thar?
Looks very good, right? I mean, there's so many options now to choose from. It's like a problem of plenty.
I think they got the SUV market bang on. I mean, I think this one company which has really got it right is Mahindra. If you look at various cars, Scorpio, the XUV 700, the Thar. I mean, just across the board, there's been quite a bit of new cars which have done well. Mitesh, technically, Mahindra has been the strongest stock in the auto pack.
Was done very well, and I think only in the last 2 days we have seen first signals of some kind of a pullback, which could see the stock retrace a bit. But I think around 1175, 1180 zone, which is about 5-6% lower from here, you will see strong buying and strong support coming. So I think if we get that dip, and because I was slightly negative on the Nifty, there's a good chance of that. I think that's an area where I would definitely want to buy into this stock.
Okay, we just have a minute to go, but let's tell you about the Prime Minister's National Logistics Policy on Saturday, which was unveiled. More on that coming up. Stay tuned. Abhimanyu Sharma filed this report.
The National Logistics Policy launched by Prime Minister Narendra Modi intends to bring down the cost of logistics from the current 12 to 13% to single digits. The PM, while launching this policy, made it amply clear that this is not just going to benefit big businesses, but is also going to benefit farmers and fishermen, as they will be able to provide their fresh produce to cities faster and will be able to earn more. Also, this policy provides for greater access and connectivity between various modes of transport, be it road transport, railways or waterways. With increased connectivity across various modes of transport, the government intends to bring down the cost of logistics, which is possibly going to make more businesses profitable and is possibly going to push for more exports and eventually a better foreign exchange reserve for India. Also, the ministries which are working on this project have already started giving their data on a common platform. The common portals which already are hosting the data will be available for various industries to refer to.
Okay, that's on logistics, but the markets have opened and the Nifty is up about 9 points, just about 7 points now. The Bank Nifty is down quite a bit. That might actually lead the Nifty 125 points down now on the Bank Nifty, and the Nifty is now turned in the red. 17,525, aligning with the global market. The Bank Nifty is actually sliding now, 200 points down on that index. ICICI Bank and HDFC Bank are leading that move on the Bank Nifty, down about 212 points. Tata Motors is down, Ultratech Cement is down, Maruti Suzuki, Cipla, Dr. Reddy's. These are few other names which are not doing too well. So just keep an eye on some of these names. Bharti Airtel, Grasim, Hero MotoCorp are some of the other names down. Ultratech Cement, by the way, is now down about 3%. I don't know if there's a dividend component which I might be missing, but that one clearly stands out. What's on the upside then? Some of these IT names. Infosys is higher. ONGC, by the way, is up 1.3. Bajaj Finserv is higher, 1.4% higher. HDFC Life is higher, so the insurance stocks doing well. SBI Life as well. So it looks like on the upside it's insurance. The Bank Nifty is now cutting its losses and it's now down just about 135 points. Sonia, over to you for broader market.
It's not bad, Anuj. It's actually bucking the falling trend. So mid-cap index is in the green. It's up about 40-odd points. The advanced decline ratio is quite solid. 1,600 stocks on the advancing side. McLeod Russell, as we were telling you earlier, is up almost about 20-odd%. This whole defense space has really found itself a new set of wings. So you have Bharat Dynamics that's up 5%. BEL is up about 2-odd%. And volumes are picking up over there. Cement, there's an interesting move playing out in the broader markets. India Cement is up almost about 4-odd%. Even from the frontliners, Ambuja expectedly is up almost about 2-3-odd%. Sugar is coming back marginally though. Sri Renuka is up about 1.5-odd%. And then some of these banks like Punjab National Bank up about 1-odd% or so. SBI, CLSA had hiked their target price over there on SBI. So that one is just trending in the green at the moment. There are plenty of stocks. Now the mid-cap index is picking up pace, and how? 120 points in the green. Plenty of stocks hitting fresh highs, whether it's something like a Thermax. Thermax has been on a tear lately. It's up 2.5%, a fresh 52-week high over there. A couple of other names like Karnataka Bank as well, fresh 52-week high, something like a CCL product. So not bad. The frontliners are just a tad bit in flat terrain, just taking a bit of a pause ahead of the Fed meeting perhaps. But in the broader markets, there's still plenty of action.
I mean, the Nifty itself, Sonia, is about 60 points off the lows. So we're up about, what, 25 points, 24 points, 17,550 is where the index is at. So it's not, I mean, that bounce is there. Let's see if it lasts or gets sold into. Bharat Dynamics is a company which did very well last week, especially even on Friday, when the market was down sharply. That is up another 4%. India Cements we highlighted. There is Paras Defense, which is up 4%. I think Paras was up on Friday. There's a little bit of pent up from left off on Friday. McLeod we highlighted. That's limit up once again. TRF, that is a Tata Group material handling company, that's up 10%. Again, TRF is picking up from where it left off on Friday. It had a very strong close in a market which sold off aggressively. What else? Inox Wind is another one which is up about 7%, and so on and so forth. But volumes are, if I go down the list, they'll start to thin out. So I guess give it a few more minutes before we get back. Astral is down about 1.75%. Schaeffler is, I think there's a brokerage note, it's down 2.6%. Max Healthcare is another one which is down about 3.5% as well. There is Aptus, which is the home finance company, which is down about 6% as well. 308, 309 on Aptus at this point in time. I mean, so after bouncing sharply, we are down for the day, on the day so far by about 30 points once again. So right where we started on the Nifty. So far, I mean, the change is small, but there's a fair bit of volatility which is taking hold. I guess a few minutes more and we'll have some sort of a kind of settled markets, settled direction at least. Our market master today is with us. Atul Suri is CEO at Marathon Trends PMS, and he's joining us right here in our studios. Atul, thanks very much for coming in.
Thanks for having me.
Great to have you with us here.
Awesome.
You know, I think the last we had you in the studio was right around the lows, right? I mean,
yeah,
I think
24th,
July. June. Yeah. And you were saying risk rewards remain very positive at that point in time. And the markets come back very, very strongly, very, very nicely.
Absolutely.
Your thought process from here?
When I look at the markets, there are two worlds. There's India and the rest of the world. If you look at the India, you cannot not but be bullish. It's an awesome looking market out here. See, last week you were what, 2-3% from lifetime highs? Yeah. Bank Nifty touched lifetime highs. And more important than just the broader index, Prashant, it is the breadth, the sectors. So I feel that when I look at Indian markets, I feel we are starting a bull market, right? And as I said, the internals are giving you confidence and they stand out in the long term. But when you flip it to the global side, yes, there are worries. You know, every morning you get up. The interesting part is the world swings between inflation and recession, depending on whom you hear. If you hear the Fed and the Economist, it's all about inflation. And if you hear corporate US, they're all talking about recession. I mean, the FedEx CEO, you had to hear him last week. It was scary. So the fact is that even out there is so much bad news. And that is at some point in time going to put pressure. I mean, we are seeing that today. We saw that even on Friday. So barring if there's no collapse as such in global markets, I think we are in for a fantastic run. I remain very, very bullish on India. I think we will not only just take new highs, we'll stretch it very, very higher. The problem is that if global markets tank really big time due to whatever events, Fed, etc., you know, there's so many moving parts to it. Nobody knows. Then it can get subdued. That's what can burst this move. But otherwise, Indian markets,
by its own breadth,
it's just fantastic. In fact, I mean, I think we're in a full-blown bull market, which is not really visible because of so much noise. And that's always positive. When there's so much bad news and still the markets are not going down, that's always good.
Absolutely. By the way, the sector of the moment is defense. Once again, and just look at Hindustan Aeronautics, HAL. It's just remarkable the way that stock has been piling on gains. Once again, higher by about 1.6%. Atul, good morning.
Morning.
Have you tracked this space? I mean, it's not big, but you know, in terms of you only have 4 or 5 stocks. But if you've made a portfolio of these stocks,
it's an overweight in my portfolio. That is exactly the point. The internals, You know, you find capital goods, infra, bearings, defense. You know, a lot of these sectors have not done well for a decade.
Yeah.
And autos, I mean, Sonia, it's one of your favorites. You know, these are sectors which move, when they move, it's not just a 1 week, 1 month. They talk about a cycle that's changing. And I really feel that if I look at the markets, I get a feeling that the industrial cycle is turning. And this is something we know which we last saw in 2003, 2004. And we know what happened. I'm fully aware of what's there in the global scene. I'm fully aware of global macros. That is why I really can't go out and give you a very, very stretched target. But there are a lot of pockets of strength. The interesting part is look at the way the mid-cap is performing. You know, the mid-cap versus small-cap. The interesting part is the mid-cap actually has been the largest outperformer in this space, which really tells you it's about quality, it's about the migration of a lot of these stocks from mid to large cap, which is really happening. Small cap very often is froth. It's retail. It is sentiment. And that is really flat. So I think the arrows all pointing up. Yes, global pain is there, global concern is there, but
Fingers crossed. Fingers, toes, everything crossed.
Because there are so many moving parts, you know. There are so many moving
your
parts.
enthusiasm, I must say, is infectious. Because if charged all of us up this morning, thanks for being here in the studio. So you're saying India is in a full-blown bull market right now. We just don't notice it because of the challenges.
Absolutely.
Who do you think the leaders will be? I mean, we've seen banks perform, but do you think it's become a bit of a crowded trade? Will the leadership change?
No, in fact, banks have underperformed for 2 years. Banks have underperformed for 2 years, and that's thanks to FI. Selling and all, you can rationalize it further. But if you look at the market, from the bottom, we are up 14-15%. Bank Nifty is up, a lot more than that. Look at something like PSU banking. It's up 30-35%. But if you look at the bigger picture on a 10-year basis, what have PSU banks done? If you take out SBI from the equation, everything else is a pretty disastrous place out there. So, barring your Kotak's and HDFC banks, there's a lot more action happening somewhere else. And that's what I came to the point that what we are seeing in terms of breadth and participation is something we haven't seen. It doesn't point to a market that's defensively poised. It's to a market that is poised for growth. And that is really what makes me bullish. As I said, I get a feeling that, almost like 2003-04, the sectors, the themes that are moving are very much what precedes a larger industrial cycle upturn. And again, the caveat being that, if the globe doesn't crap out, if something really goes bad out there, yes, we can't hold it. We can't be so delinked from it.
But what makes you so bullish, Atul? Because, now there are talks of 100 basis points rate hike by the Fed. That was unimaginable about 6 months ago, right?
But the market knows it. Tell me something that the market doesn't know. Tell me any good news. There's no good news. Every day you wake up, there's bad news. And as I said, the funny part is whom you hear. If you hear the economists and the Fed, it's all about inflation. And if you hear corporate America, or if you hear the chiefs, it's all about recession. I mean, we can't make up our mind depending on which side of the bed you woke up on, whom you read first thing in the morning. So what I'm trying to tell you is that there's so much bad news. The market knows it. If there's nothing incremental and the markets don't tag or make... See, the June lows are very important. I mean, let's put it in terms of numbers. The June lows are very important for global markets. The S&P is about 5-6% from there. So is the NASDAQ 7% from there. We have a Fed meeting coming up next 2-3 days. Yes, it's likely to be harsh. It's hard. It's supposed to be bad news. Let's see how markets... If markets don't take out those lows, I think that is going to be very positive.
Okay, by the way, the market's taken out the Friday low and how? Just look at the Nifty right now. It's tanking. And I mean, my worry is not just the Nifty. Look at the broader market. On Friday, there was first sign of massive decline in the broader market. The advanced decline was actually down quite a bit. I mean, almost at one point was 1:6 or 1:7. I think that line is very important. It's now beginning to look like, perhaps some kind of clean out which is happening. In the broader market, we've seen big rally. But it looks like some part of that clean out is on right now. Sorry, Atul. Since a massive rally in the broader market,
sure.
Are there bubble territories? Can you spot any?
Where is the bubble? How many people are calling you? Where is the kind of the retail euphoria? Where are people buying penny stocks? Where are people seeing upside circuits? No. Whatever is moving, there'll be some. Like if you're
Russell is there, Suzlon is there.
No, that's okay. They'll always be there. There are some people out there who have to find their daily wages. But really, you will not find that kind of broadness that there is. That kind of retail. That's what I made the difference between small cap to mid cap. So as I said, the news is bad. And see, Anuj, I'm not talking about today, tomorrow. I'm talking about a few months down the line. This is, as I always keep saying, this is a great buy on dips market. It's a good buy on dips market. You will have pain points. The pain will come globally. If globally things don't tank out. And what is going to really happen in the globe, as I said, no one knows. We are swinging from inflation to recession day in, day out.
Yeah.
So nobody really knows that equation, that puzzle. But what I know, what I see is specific to India. What I invest is in India. What sectors I look at is in India. If those things don't really crap out, if there's no disaster out there, at the end of the day, you have to remember that the last top was 10, 11 months ago. We are not in a runaway bull market. There is no bubble. There's no froth. Markets are corrected 15, 20% lower globally. So we're not in a runaway bull market. And that's when things implode. In fact, we have been through a lot of pain. It's been a one-year time correction also.
Just to take off from what Anuj said, usually when we say retail euphoria, we look for signs in mid and small caps, right?
Yeah.
That's the last 15, 16
Absolutely.
years. But this is arguably also a completely new phase because of the retail participation, right?
Sure.
Much more informed kind of decisions by retail.
Right.
It's a huge amount of money which is coming and that has gone into the market.
Sure.
Maybe it's gone into mid caps, maybe it's gone into good quality companies as well. But that by itself does not mean that, that mid and small caps and quality companies can't fall because they've gone up too much. I mean, that's
See, and the fact is, how is a retail investor invested? If is it going to be through mutual funds, etc., then it's a different time horizon. It's a different thought process. The question is, it's as I said, it's my friends and family, how the phone is ringing, kya lene ka, everyone, when it's ringing, and the best part is they tell you a stock and it goes up 10%, and you told them don't buy it, it's risky, and you feel like a fool. So, that kind of situation is not there. All the guys who are retail, their portfolio is still off 20, 30, 40%, let me tell you. Though the market's touched a new high, those portfolios are still off 20, 30, 40. For that euphoria to come in, for that kind of weak hands to come in, today the market is being driven higher by stronger hands. And those stronger hands are not into the banking related, the kind of stocks, the Bharat Dynamics or the HALs that you mentioned.
Just one thing, you said that unless the global market completely, the bottom falls out. But the fact is, as you also said, the S&P is already down 18, 19% for the year.
Absolutely.
The market here is higher in, in rupee terms.
Right.
Is there a catch-up which is necessary? Or you think it's possible that, we go through the next year, year and a half like this, huge, with a 20 percentage point difference in terms of returns, and then US does its thing and comes back, and then there's a global upcycle.
Yeah, so I really feel that for a decade, thanks to the liquidity flows, we see unanimous bull markets globally. If it goes into equities, everything goes up. Dogs and cats, in fact, outperform. But as liquidity is getting tight, we all know that things are going to be more qualitative. It's like when you have limited money, you have to choose a stock. Now money is limited, you'll have to choose the country. So markets are going to be a lot more country-specific, sector-specific, stock-specific. It is not going to be what we experienced in the decade. As I like to tell myself, that the decade of ETFs outperformance is over. We are going to be back to active managers because active management is about selection.
The globe has also shrunk, right? In
Absolutely,
terms of investable
because what happened was there was so much money. You never had that kind of time to go out and differentiate. You went and put it into baskets. And those baskets are good represented by ETFs. When you're not going to have that kind of gush of liquidity, you are going to be selected. Money is there, investors are there, but they are going to be a lot more selective. And that is how India stands out. What I like about it is that if you look at from the June lows, India is the best performing market on the pull-up.
It is, yeah.
So that really tells me
even
that
year to date, year to date India has done well.
Even sectors in India, you'll find what IT and pharma is doing. They've done nothing. So markets are selective.
By the way, the market is under quite a bit of pressure, especially the mid caps right now. So just keep an eye out on that. But now in the last 5 minutes or so, it's very volatile. It's getting very volatile. Just look at the mid cap index. It's now there's a V-shaped recovery that you've seen just in the last 5-6 minutes. I wanted your thoughts on autos. I remember the last time we chatted, you said autos will see a big bull run.
Absolutely.
And they have. But what stage of the upcycle are we in right now? Is it too late for people to enter? Is there still a lot
Not at all. I have, again, having seen many cycles, Sonia, these are very, very secular themes. Autos and all, when they're not 3-month rallies. These tend to be multi-year rallies. And, again, auto, what you're seeing are those names, those brands go beyond and look at auto ancillaries. Go and look at some of the EV players. There's a lot of action happening there. And what I'm telling you is that these are coming out of a decade of underperformance. You know, these are not some things which are bubbles or people own them. Everyone is kind of underweight. Everyone is skeptical. You know, PSUs, again, another space, done so well. But whomever you speak to is skeptical. So the fact is that we are coming out of a very big global kind of underperformance in these spaces. And that's where the opportunities, if they don't go down even on bad news, I think that is the big positive.
One last question, very short one. One of the stocks which we are going to talk about now, Indian hotels. In fact, this whole unlocked trade has done superbly
Absolutely.
well. And again, coming out of multi-year bear market.
Absolutely.
Views here?
See, I won't speak on stock specific, we'll speak on the sector per se. You'll find that Indian hotels, yes, again, marquee name up there, but you'll find a lot of other hotel stocks also. They're doing very well. So these are themes. These are places. You know, like we spoke about defense. Whoever spoke of defense as a theme for the last 20 years, tell me? Nobody. Hotels as a theme. I mean, we knew there's a theme, but whoever invested in hotels, PSU banks is a theme. So there are a lot of themes that are emerging after almost a decade. And that is what tells you about breadth, what tells you about revival. And that's what makes me so bullish on the market.
Okay, talking about hotels, where's your next holiday, Atul?
Just got back, planning 2 more this year.
Okay, now we know why Indian hotels
I'm going to Boracay for Christmas, New Year. That's somewhere in the Philippines.
Oh, wow.
Do some bit of diving also. Yeah.
That's lovely. All the best with that. Well, now you know why these hotel stocks are doing so well, right? Okay, well, that's Atul Suri. That's actually the second big voice in the last 48 hours telling us that India is in a big bull market. You heard Rhythm Desai of Morgan Stanley as well. So a lot of bullish views coming through. But let's move on, since we were pointing out that Indian hotels is the stock on our radar. The stock, in fact, has hit an all-time high. There's a 13% up move just in September so far. And if you take it cumulatively this year, it's a rise of 78%. The hospitality sector has witnessed solid demand post the pandemic. In fact, it's a frenetic pace at which occupancies have risen, even in seasonally weak periods. So we're trying to understand what this can mean for business. Puneet Chhatwal, the MD and CEO at Indian Hotels, joins us now to talk about that. Puneet, good morning and thanks a lot for joining in. You know, occupancy levels have definitely gone up. People are booking rooms left, right and center. But give us some numbers. In Q1, it was around 70%. How much has it been in Q2 so far? And what is the big trend looking like?
Good morning, everyone, and thank you for having me, Sonia. The sector, as was mentioned by the previous speaker, is performing quite well. Occupancies are holding up, although Q2 is the weakest quarter. Still, we are seeing it trending very close to the Q1 numbers. Also, the good news is that the rates are holding up, and we are actually seeing a good increase in rates. So if we took 1920 as a base, I think it would be fair to say that the sector, based on various reports by various analysts and consultants in the industry, is trending plus 20%. Then you need to add to that company specific based on how your growth has been. And I think that that makes us a bit more optimistic. And in fact, going forward with the international travel, once that comes in, specifically between the months of October to March, we do expect a reasonable uptick to where we stand today.
Puneet, good morning. You know, just getting back to the rates. I mean, Taj Landsend, for example, you know, used to be available between 5 to 10,000, 5 to 8,000. Nowadays, you know, it's tough to get it at almost 20,000. Someone was complaining at a couple of conferences going on, and you know, looking to book a hotel, a room at Taj, and it was costing the suite that is about 60 or 70,000, you know, a night. Is this sustainable? I know you've seen pain, and now you're seeing good times, but is this kind of room rate sustainable?
You know, it depends on the market. So metros would normally perform well. It's also dependent on the kind of conference demand, the MICE business, that generally drives rates up. And also international for our portfolio, when they come in to India and want to stay in the palace hotels, I think those kinds of rates are justified. Generally speaking, across the globe, you're seeing an increase in rates, and they may correct a bit, you know, towards plus 10% or minus 10%, but Nothing else is going to change because the supply is going to remain constrained. Not many hotels have got built in the last 2 years, and when the demand begins to come back, it will continue to outpace supply in the market, and that is, the rate is really a function of demand and supply. So I personally am a firm believer that the rates will continue to increase, and we have to benchmark rates of trophy assets in comparison to those in the West. Even if it is 20,000 is $250. Now, getting that kind of quality, that kind of location, those kind of views, if India is moving towards number 5 or number 4 or number 3 economy, we must have the ability to charge higher rates. And that is something we all need to collectively as an industry, as a fraternity, need to think about.
This my segment, the conference segment is doing, I was talking to a friend who said, he's got to arrange a conference in 2024. 2,000 people conference, global conference happening in Mumbai.
Yeah.
He's already panicking.
Yeah.
So,
About the
the Motilal conference, we were discussing the number of people who are here.
Yeah,
So.
no, absolutely. Puneet, hi, good morning. Prashant here. Just so, this, what's the trade-off between occupancies and rates? I mean, will you be okay sacrificing a little bit in terms of occupancy to keep rates higher in anticipation that demand continues to be very strong? What's the trade-off there, if any?
You don't try to try to keep the occupancy and still optimize the rates or take it as high as possible. But definitely it depends on your channel mix. So you might change your channel mix, and certain low yielding businesses, you might have to let go of them because they may not make any financial sense. But when I just overheard you about conferences, just look at this about what's happening in Delhi. The Dwarka Convention Center is going to open. The new convention center being built in Pragati Maidan for the G20, that will open. So I think from an infrastructure point of view, the government spending on the infrastructure is a big boost for the sector. And I think we stand to benefit from these kind of facilities that are available, so we can host events for 2,000, 3,000, 4,000 people, which is not normally possible to do in a hotel with 500 rooms or even 700 rooms.
Okay,
Delhi is a crazy market, though. I mean, it's like, I was just there for some time. Even on weekdays, you go to a decent mall. There's no parking. There's no place to eat. I'm talking about Monday. I'm not even talking about Monday or Tuesday. There's no place.
So even in Bombay, right? I mean, the other day I heard something really bizarre about a restaurant charging a cover charge to enter, and it's on weekdays.
Yeah.
It's not even on weekends, right? I mean, earlier you just had like pubs and bars taking a cover charge, but now you're in restaurants for seating, and there's a time period, a stipulated time period as well. It's crazy. But Puneet, tell us about your own expansion pipeline. Since demand is coming back in a big way, you have a target of 300 hotels, but what can we expect in the very near term? What would the capex be that you're putting on board?
So I think that's a good question, Sonia. In the last 5 years, we have added almost 120 hotels to the pipeline, of which a lot have also opened. So currently our pipeline is north of 65 hotels with 180 in operation. And that's why the target of 300 hotels or 500 homestays is very much realistic over the next 4 years. Of these hotels, 50 were signed in the last 24 months. And we have opened 6 hotels this year, but expect to open 12 more in the last 6 months, because that's the right time to open hotels, and also because of certain delays from the COVID. Therefore, we would have opened 18 hotels, which means 1.5 hotels a month. And that is something which we were really looking forward to in accelerating our growth. Opening new destinations. Today, our group covers 100 plus destinations in India. If we add homestays, it is 125 destinations in India. And I think this journey of our focus on creating new destinations, like the group has done in the past 3-4 decades, is going to be a very good story for the sector in India.
Puneet, since you also are promoter and non-executive chairman of Oriental Hotels, there's been quite a bit of buzz about an impending merger between the Indian hotels and Oriental Hotels. Any truth to that? And if yes, by when can we expect that?
Anuj, there are always a lot of discussions. If you're a dynamic company, there is a lot of discussions. We might be buying this, buying that. Not just a company which is a part of our promotership. I think whenever there is any substance as a listed company, we are expected to make that announcement, and we have to inform the exchange. So I would not go with speculations, and preferably if there was some news like this, I'll give you a call, and then I come back on the channel and discuss it with you.
But is this something, it seems logical, given the shareholding pattern, is this something which is being mulled over, at least?
See, generally speaking, it is a way business was done 4 or 5 decades ago in terms of creating joint ventures and promoterships. But we haven't done any such thing in the last 5 years. This is not a part of our strategy to create more joint ventures. In an ideal world, like we have simplified by having one or the other smaller company merge into our business, that would be a good way forward. But the partners who have helped us grow, we will always remain supportive of them, and that is the legacy, not just of us as Indian Hotels, rather a part of the philosophy, culture and DNA of a Tata Group company.
Talking about mergers and acquisitions, you also bought that remaining 40% stake in Ginger Hotels, right, for 500 crores?
Yes.
Anything else, any other acquisitions that you're looking at perhaps in the near term?
In the near term, we have been, firstly, we are very pleased to have bought and made Ginger a wholly owned subsidiary. Ginger is one of the is our fastest growing brand today. I think it has a great future for the Indian market because of the way the district capitals, the state capitals and the commercial capitals work. That market size is very large and underrepresented by brands. So I think therefore Ginger becomes a great opportunity over the next 5-10 years in that positioning. In terms of other M&A activities, I think a consolidation will happen in the sector, but this will happen, it's a normal part and parcel of any industry, any business, things keep happening. But I think today it starts becoming more realistic because the gap between the selling price and the purchaser's, purchase price has narrowed down significantly. If you took valuations based during the COVID period, the gap was very large. That's why not much activity happened. We are very well positioned because of net debt. We don't have any net debt. So, and we're focused on free cash flows. So I think looking at our balance sheet, looking at our capital structure, looking at our positioning and the brandscape, we are well positioned to take advantage of any M&A activity that might come on the market.
All right. And we'll await when that happens. Thanks very much, Puneet. Great to have you with us here, and appreciate you joining us on the channel this morning. Thanks very much and good luck. Well, the market is in the green. So is that the final outcome of all the volatility we've seen in the first 30 minutes of trade? I mean, it's tough to say, but for what it's worth, now the market is back up. I mean, just consider what's happened so far. The chart tells you the story. Sharp gap down. The low was 17,474. Then a throwover high of 17,564. Then a complete collapse to the day's low, which happened at 9:29. The low was 17,429, and then a high, and then a fall, and then we are back up again. So quite something for 30 minutes of trading so far. We'll take a quick break here. Up next, we connect with the management of Cholamandalam Investment and Finance to discuss business outlook and commercial vehicle demand trends. So that is an interesting conversation. So stay with us. Later, we'll also have Bharat Madan of Escorts Kubota. They've announced amalgamation of Escorts Kubota and Kubota Agri. Stay tuned. Both those interesting management conversations coming right up.